Imagine a company that doesn't own a single piece of real estate, like none at all. Imagine a company that doesn't write a single line of code. Now imagine that exact same company somehow convincing the smartest people on Wall Street that it's worth $47 billion. Crazy, right? Well, welcome to The Explainer. Today we're breaking down the dramatic rise and fall of corporate power and one of the most catastrophic downfalls in business history. This isn't just a story about a failed business model. It's this wild, jaw-dropping narrative of toxic ambition, massive corporate delusion, unchecked Wall Street greed, and a charismatic leader who somehow treated a commercial real estate venture like it was a spiritual cult. Okay, let's dive into this. $47 billion. It's an absolutely staggering peak valuation for a company that started with literally nothing. It was hailed as the future of work, a complete workspace revolution that promised to, and I quote, elevate the world's consciousness. But in a matter of weeks, that massive valuation crashed to near zero. So the question staring us right in the face is this: how did they pull this off? How did a company essentially acting as a glorified middleman for office space trick the most ruthless financial minds on the planet into handing over billions? Well, to understand this incredible illusion, we really have to go back to the beginning. Act 1, The Illusion. To grasp the rise of WeWork, let's look back to 2010. The U.S. economy was still reeling from the 2008 financial crisis, the gig economy was absolutely booming, and traditional offices were just way too expensive and rigid. Enter charismatic founder Adam Neumann and his co-founder Miguel McCulvey. Their concept was brilliantly simple: lease a massive, boring office building, chop it up into ultra-trendy workspaces, and rent them flexibly to startups and freelancers. But the secret sauce here? They weren't just selling desks. They were selling a community lifestyle. We're talking neon lights, arcade games, free microbrewed beer on tap. It perfectly captured that millennial desire for a fun, vibrant work culture. Act 2, Disguised as tech. And this brilliantly illustrates the massive structural problem WeWork ran into. As they rapidly expanded across major cities, they hit a wall. To keep that hypergrowth going, they needed cash, and lots of it. But here's the thing. Traditional real estate is valued at really low multiples on Wall Street. It has high overhead costs and slow growth. Tech companies, however, they get those massive valuations because software scales instantly worldwide. So Neumann made a move that was both genius and incredibly dangerous. He completely rebranded a physical real estate company as a tech ecosystem, telling everyone WeWork was actually a physical social network. I mean, he literally said this out loud. Valuation is based more on our energy and spirituality than on revenue. Think about that for a second. And the crazy part? Silicon Valley swallowed the hype hook, line, and sinker. Venture capitalists were so terrified of missing out on the next big thing, they treated WeWork exactly like the next Uber or Airbnb, pouring billions of dollars into a company based on, well, energy. Act 3, The Blindness and Red Flags. Because when a charismatic leader sells spirituality instead of revenue, things are bound to go off the rails. Enter the ultimate catalyst, Masayoshi's son, the billionaire CEO of SoftBank. After just a 12-minute tour of WeWork, 12 minutes, he told Neumann he wasn't being crazy enough. SoftBank pumped billions into WeWork, sending its valuation skyrocketing to that dizzying $47 billion peak. This massive backing gave other investors this false sense of security, totally blinding them to reality as WeWork went on an unchecked global expansion spree. And with all that unlimited cash, WeWork completely lost its focus. Just look at these bizarre side hustles. A commercial real estate company suddenly started buying wave pools. They invested in indoor food markets. They even launched WeGrow, a private elementary school in New York focused on entrepreneurial spirit and mindfulness, run by Adam's wife, Rebecca Neumann. It was absolute, undeniable corporate absurdity. But behind the scenes, we need to analyze the financial red flags that investors completely missed during this initial growth phase, because they weren't just waving, they were screaming. Investors completely ignored a corporate culture spiraling into chaos. You had these mandatory alcohol-fueled company retreats called summer camp that were basically massive music festivals. Neumann's leadership was entirely erratic. He famously banned meat at all company events for environmental reasons, but was caught eating it privately. He traveled the globe in a $16 million private jet paid for by the company. But the most glaring financial red flag? Extreme conflicts of interest. Adam Neumann was actively buying commercial buildings using his own personal money and then renting those exact buildings right back to WeWork, pocketing millions of dollars of company cash for himself. And if that wasn't enough, let me ask you, would you pay a CEO this much money just for a trademark? Almost $6 million? Adam Neumann actually trademarked the word we. He then forced his own company, WeWork, to buy the trademark from him for $5.9 million. The audacity is staggering, yet the investors just kept smiling and writing checks.
Act 4. The S1 reality check.
But gravity eventually catches up with everyone. To take a company public on the stock market, you have to file a Form S1 with the SEC. It's a mandatory document that finally opens up your financial books to the world. In August 2019, Wall Street analysts, institutional investors, and financial journalists finally got to look behind the curtain of this $47 billion unicorn. And the reality they found was the ultimate record scratch, absolutely shocking the financial world to its core. Now, what's really interesting about this slide is the sheer scale of the financial devastation. It was breathtaking. Let these numbers sink in for a minute. In 2018, WeWork brought in $1.8 billion in revenue. That sounds great, right? But they generated $1.6 billion in net losses in that exact same year. They were burning through hundreds of thousands of dollars every single hour. A physical real estate business simply cannot survive those margins. And to make matters worse, the S1 filing itself was kind of a total joke. Instead of a sober financial document detailing a path to profitability, it read like a bizarre spiritual manifesto. I mean, it was officially dedicated to the energy of we. When institutional investors read this, they instantly realized that the $47 billion valuation was a complete myth. It was built entirely on hot air, hype, and unchecked founder ego. Act 5, the spectacular collapse. The backlash from the public and the financial sector was brutal, and it was instantaneous. The IPO had to be delayed immediately because literally no serious investor wanted to touch the stock. The valuation cratered from $47 billion to under $10 billion in a matter of weeks. In September 2019, the board of directors successfully ousted Adam Neumann to try and save the company. But there's this ultimate gut-wrenching corporate irony here. To get Neumann to leave the company he broke, SoftBank paid him a staggering $1.7 billion golden parachute just to give up his voting control. The architect of the failure walked away a billionaire, while thousands of everyday employees were laid off with little to no severance. Let's move on and see how this builds. In the aftermath, WeWork spent years trying to aggressively strip away the eccentric side hustles, sell the private jet, and close the schools. They did eventually go public in 2021 through a SPAC at a tiny fraction of their peak value. But then COVID-19 hit, dropping office occupancy rates globally. Those massive long-term commercial leases they signed during the hype years, they became a financial noose around the company's neck. The descent was rapid, marking a truly dramatic fall of corporate power. From the devastating S1 filing in August 2019 to Neumann's exit weeks later, a hobbled public offering in 2021, straight down to the inevitable. In late 2023, WeWork officially filed for Chapter 11 bankruptcy. It cemented its legacy as one of the most spectacularly overhyped business failures of the modern era. So the crucial point is this. The rise and fall of WeWork is the ultimate cautionary tale. It exposes the extreme dangers of venture capital FOMO, that fear of missing out. It shows exactly what happens when you celebrate hypergrowth at all costs while completely ignoring basic economics. Charisma and neon lights, they just cannot replace a viable, profitable business model. Adam Neumann walked away with $1 billion fortune, leaving behind a shattered company and a textbook example of corporate hubris. But as we wrap up this explainer, I want to turn it over to you. Looking at all the evidence we just went through, what do you think was the ultimate fatal flaw that killed WeWork? Was it the insanely inflated valuation? Was it the toxic, unchecked corporate culture? Or was the fundamental business model itself just always doomed to fail? Think about it. Thanks for joining me on this deep dive, and remember, keep questioning the hype.